Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Wednesday, April 20th, 2022, and I'm pre-recording this Trading Places Live for Thursday, April 21st. Currently, futures are up a little bit. We've got Dow futures up 113 points. S&P 500 futures are up 20. NASDAQ futures up a little bit stronger on a percentage basis, up a little over 100 points. We had Tesla come out with earnings after the bell on Wednesday, and they beat on their top and bottom line, had a pretty good forecast, and the stock was up a little more than 5% after hours, and that certainly is helping futures. Crude oil right now showing unchanged, just a little bit below $103 a barrel, and the U.S. 10-year Treasury yield just below 2.88%. So before we get into any of that, though, let me walk you through today's agenda. We're going to start off with the daily market recap, jump into talking technically. I'm going to take a look at the 30 Dow components, and I'll show you how I'm going to do that pretty quickly. And then go into earnings spotlight, where we'll take a look at Tesla and some others, and then wrap up with the three you must see. Before we get into any of that, though, I do want to let everyone know, especially those who are new to the show, that if you go over to earningsbeats.com and scroll down, you will find a free newsletter. I write this 3 times a week, Mondays, Wednesdays, and Fridays. All it takes is a name, email address. There's no credit card required. You can unsubscribe at any time. It's a very quick read, usually just a couple paragraphs and a chart, but it's very educational in nature. So again, all you need to do is sign up with your name, email address. We do not give out your information to any outside third parties, so you don't have to worry about any privacy issues there. And you, like I said, you can unsubscribe at any time. All right, let's go ahead and take a look at what happened on Wednesday. So in your daily market recap, you can see the Dow Jones Industrial Average finished up 250 points. The S&P 500 was down 3. NASDAQ was down 167 points. So some pretty bifurcated action. And one of the reasons I want to take a look at the Dow components a little bit later is look at the Dow right here. Going back and testing the high from late March, look at where the S&P is relative to late March. And look at the NASDAQ. Look at the mid caps. Look at the small caps. I mean, everything just about is down from the latter part of March, except if you go down and look at the sectors, check out real estate. That's actually higher than it was in late March. Staples, much higher than it was in late March. Healthcare, slightly higher than it was in late March. The problems that we're seeing, again, relate back to those aggressive sectors. Technology, you can see down considerably from late March. And consumer discretionary also down fairly significantly since late March. So this bifurcation in the market continues, where we're seeing rotation into defensive areas and rotation out of aggressive areas. And that brings me back to the Dow performance, up 250. Got a lot of value-oriented companies on the Dow, many consumer staples, and those names are helping to lead the Dow and try encouraging the Dow to make this breakout. But we're going to look at those stocks in the Dow in just a few minutes. Let's move on to the 10-year Treasury yield. 10-year Treasury yield on Wednesday, you can see did fall back about 7 basis points to 2.84. But I do know later and after hours, the yield was back up. We were up at about 2.875. So it does look like, at least for now, we'll see what happens in the morning. Got some economic reports and so forth that'll be coming out. But at least for now, it does look like the 10-year Treasury yield could move back up again on Thursday. Speaking of those economic reports, initial jobless claims will be out at 8:30. Last week, 185,000. We're expecting that to drop to 175,000. And then let's see, we got March leading indicators coming out. The expectation there is for, let's see, February rose 0.3%. Looks like that's supposed to remain the same. Also up 0.3%. The March Philadelphia Fed, February was 27.4. We're expecting that to drop to 20.5. So those are, what we're going to be looking at in terms of economic reports coming out on Thursday morning. All right, talking technically, I talked at the very beginning about how staples are doing really well and discretionary not so much. Well, this is that sustainability ratio that I like to look at. And so I thought for talking technically today, we would just pull this chart up and just see what's going on. I mean, if you recall, the S&P 500 topped back here at the beginning of January, but notice where consumer discretionary topped relative to consumer staples. It was all the way back in the second half of November, about 6 weeks before the S&P 500 topped. So this was one of the clues that alerted me to the fact that we were probably going to get off to a rough start in 2022. Why else would Wall Street be repositioning away from the aggressive discretionary area and moving into the more defensive staples area? The primary reason is that we're looking at turbulence ahead. Wall Street doesn't like what it sees, and as a result, it wants to be more defensive. And so that's always a warning. And if you notice, throughout 2022, things really haven't gotten much better. We went and set our low on March 7th. And then, of course, if you recall, there was a lot of in-the-money put premium as we headed into option expiration week. And that's where we saw one of the biggest rises in consumer discretionary on a relative basis to staples. And that's because many of those discretionary stocks, especially the ones that had that were traded significantly in options, had a lot of in-the-money put premium on those stocks. And so it behooved market makers to actually lift those shares. And that's exactly what we saw all week long for option expiration. And then shortly after option expiration, about a week later, is when we once again saw this group top relative to staples and start moving back down again. We're not far from breaking down consumer discretionary versus staples below that March 7th low. Now on Thursday, we should get off to a better start because Tesla is a big component of the XLY. And Tesla reported earnings, very strong, up more than 5% after hours. So that's definitely going to give the consumer discretionary area a lift. So I'd look for this ratio to climb back up again. But let's see what happens during the day. I want you to look at what happened today because this has been the problem really throughout 2022, but especially since the stock market topped back on March 29th. Look at the XLP, consumer staples chart. First of all, if you look at this, you're going to see almost all hollow candles. Very, very few filled red candles. A filled red candle means that you're closing below the open. Hollow candles, on the other hand, mean you're closing above the open. So what we're seeing here is even when there's intraday weakness, usually staples are finishing pretty strong, which results in either these hollow candles or in the case of early April, you can see this one candle right here with a long tail to the downside, but we came back up, closed almost all the way up the high. That's a bullish candlestick when you're down significantly intraday, early in the day, and then come rallying back and closing near the highs at the end of the day. That's a good sign. And you can see a lot of times it leads to more strength, which is what's been happening with the XLP. But notice today's candle and yesterday's candle, big hollow candles. So not only, it looks like in this case, we kind of opened flat and then were bought throughout the day. But then today we gapped up and then continued moving higher. Now this is consumer staples. I want you to look at the difference between what you're seeing on this chart and what you see on consumer staples, on consumer discretionary. This is the XLY. First of all, look at the number of big red candles, filled candles that you have on this chart. Even two black filled candles. A black filled candle is where you finish up from the prior day, but it's because you gapped higher. You gap up, you close below the open, but the reason it's not red is because you still finished up for the day. Red filled candles mean you close below the open and you actually closed below the prior day's low or below the prior day's close. So red candles and filled candles, black filled, red filled candles, both carry a little bit of bearishness, whereas hollow candles, in my opinion, offer up a little bit more bullishness because you're closing stronger at the end of the day. But again, look at this chart. Look at these big red filled candles and also the two black filled candles in here. And then compare this to the XLP. Do you see the difference? The XLP is being accumulated. The XLY is being distributed. And even tomorrow, with Tesla coming out with their great report and gapping up, I want to see how it finishes. Don't tell me how it starts. I don't care how, well, I do care how it starts today. I mean, obviously, if you own it and it jumps up at the open, you're making money. So I do care. But, you know, when you're trying to evaluate the strength of the market or strength of certain areas of the market, you really want to finish strong. You don't want to just start strong. You know, it's kind of like in baseball, you know, you jump out to a 5-0 lead in the first inning. Well, if you lose 10-5, who cares about what happened in the first inning? You know, you want to finish strong. You want to win by finishing strong. And you can see that that's happening right now on the XLP, and it is not happening on the XLY. All right. Let's go ahead and jump into the Dow components. Now, one thing you can do with the Dow components, there are 30 Dow components. And if you set up a chart list of these 30 companies and you set it to CandleGlance, CandleGlance pulls up 30 charts at a time. So essentially, you can pull up the whole Dow Jones on these 30 little mini charts. Now, when I go through and look at these, if I just wanted to look very quickly, here's what I look for in the short term. Just a quick and dirty, am I bullish or am I bearish? I want to see, one, prices rising. So I want to see an uptrend. And then I also want to see the AD line rising. So this tells me, obviously, price momentum is moving up. We're in an uptrend. And with the AD line rising, that tells me a lot of times that we're finishing the days pretty strong. If you know how the formula works for the accumulation distribution line, don't confuse this AD line I'm talking about with advanced decline line. That's more of a review of how many stocks went up versus how many went down. Accumulation distribution is specific to whatever security you're looking at. So in this case, Amgen. If the AD line is rising, what it's essentially telling me is that the action in this price, in the price of the stock, is mostly bullish in the afternoons. That's how the AD line rises. It's based on volume, number one, but it's also based on where you finish at during a particular day relative to the high and the low. So if you're right in the middle, let's say a stock's, you know, opens or its low is 100 and its high is 110. If it finishes at 105, there's no change to your AD line, accumulation distribution, because you're literally right in the middle. So you take 0 and multiply it times the volume, which is 0, and you add it to the prior day's AD. Well, it's not going to budge. But if you were slightly above, let's say you closed, or let's say you closed all the way at the top. So your low was 100, your high was 110, and you closed at 110, you would take 100% of the volume and add it to the prior day's volume. So when you finish strong and you finish in the upper end of a candle, that's when you're going to see rises in the AD line. On the flip side, when you tend to finish weak and toward the bottom of the day's candle, then that volume is multiplied by a negative number because you're at the bottom. It's a negative AD calculation. And so the AD line will drop on a day like that. So this is just a culmination. It's just a running total, cumulative total of the AD line. So what you want to see is price going up and the AD line going up. So when I look at these charts, first of all, I can tell you Amgen, yeah, I like what's going on here, and it's in the healthcare area. Defensive groups like healthcare performing well. So this one looks pretty good. And as I look across the price action, here's another one. Look at Caterpillar breaking out, AD line strengthening. I think Caterpillar looks good. The flip side would be something like Salesforce.com, where you see price action going down. Looks like we've got a downtrend followed by maybe a bear flag. AD line down near the low for the last 6 months. This doesn't have a good look to it. So Salesforce, to me, I'm not interested in trying to trade, not on the long side. Long side, I'm looking for momentum. Now, Cisco is kind of odd because price action is going down, but the AD line's been fairly strong. Maybe that's a signal price action is going to move back to the upside, but I'm looking for confirmation. Look at Chevron. Price action going up, AD line going up. Beautiful. Disney, opposite, down and down. Dow Holdings just recently broke out. Look at the AD line moving up to about a 5.5-month high. That looks pretty good to me. Goldman Sachs, no. Home Depot, no. Honeywell, no. IBM is improving. Now, IBM, their long-term track record bothers me. I mean, when a stock is still where it was 10 years ago, and we've had a huge secular bull market rally, that just kind of, I've seen so many false starts by IBM. I've got to see more strength. So I'm not going to get excited over 1 or 2 days. Intel, price action going down. Not really liking that. Johnson & Johnson looks good. Uptrend, AD line moving higher. JP Morgan, nope, going the wrong way. Coca-Cola looks strong. This is a leader in soft drinks. Price action breaking out. AD line looks good. Going through these others, let's see. Merck in healthcare area, pharma, doing well. Price action looks good. AD line looks good. Procter & Gamble trying to break above this 165 level up near a 52-week high. And you can see the AD line also near high. So it's not exactly as strong as some of the others, but it certainly isn't weak. It looks like it's ready to make a breakout. Travelers, okay. You can see Travelers making this move up. Did pull back with its earnings report, but its AD line still remains pretty strong. So I'd like to make sure this one bounces off about 172, 173. But otherwise, I think Travelers looks pretty good. UNH looks really good. This is one of my favorite stocks on the Dow and in the market in general. Beautiful price action. AD line just recently set a new high. I think this one looks good. Visa, just kind of sideways. Same with Verizon. Walgreens, not really that great. Walmart looks good, though. Walmart has really improved over the last 6 or 7 weeks. Price action straight up, AD line going up with it. So that's just a really quick little, quick and dirty analysis of 30 stocks on the Dow. But you can do that very quickly. This is a nice tool over at StockCharts to use the CandleGlance, especially with the Dow Jones, since there's 30 stocks, and CandleGlance puts up 30 at a time. So it works out really nice. That's just, you can just quickly identify, stocks just, and how they're performing relative to one another just by doing a simple analysis like this. So I could tell you literally within about 2 minutes of the 30 Dow stocks, which 5 or 10, really catch my eye. And the rest of them, I want to wait. I'm not going to try and catch bottoms. It's really not what my style is all about. I'm trying to go with momentum. And right now, the defensive areas are the areas that are working. But you can see why the Dow is performing better than many of the growth stocks on the NASDAQ. I mean, these defensive stocks that we're looking at, the biotechs, the pharmas, and even some of the industrials like Caterpillar showing some strength. So we do have some strength in industrials. So overall, pretty good action in many of those Dow components. All right, let's move on to earnings spotlight. So first, I wanted to take a look at Tesla. So Tesla came out with their numbers. They beat on their top line. They beat on their bottom line by a mile. They were expected to have a profit of $2.15, and they had a profit of $3.22. So that was a 50% beat on earnings. And you can see Tesla had a rough day heading into earnings, but with earnings, it's up, I think it was back up to about 1,030 or so when I looked. So we're talking about $53 higher, and right back up to about the high of yesterday, or Wednesday, I should say. The high was 1,034, and we're going to probably be somewhere in that neighborhood. We'll see how things evolve overnight. Maybe some of these stocks lose luster. Maybe we pick up a little strength. But right now, Tesla, to me, short terms in this uptrend, pulling back, but just growth stocks in general don't look so great. I will say, though, Tesla is a leader in the auto space. You can see set a new relative strength high at the beginning of this month. So Tesla is your leader in the autos. There's no question in my mind. And I've said many times, I'll keep saying it, if I had to own one stock and hold it for the next 10 years, this would be my pick right here, Tesla. I just believe that they're the same stage that Apple was maybe 10 or 15 years ago. And I also believe within probably the next year or two, I'm going to say 2 years, I think Tesla will be the most valuable company in the world. I think it will pass Apple. It'll pass Microsoft. It'll pass all of the FANG stocks. I don't know, maybe we'll call it Tang at some point, because Facebook certainly doesn't deserve to be in it right now. Anyhow, that's Tesla. Good report. Should see a nice gap up in the morning. Then we'll see what happens. Again, many of these discretionary and technology companies, when they do start off well in the morning, they don't finish well. We really need to start seeing these growth stocks finish better before we can start to grow more bullish about the market. Let's see, what other stocks did we have? Lam Research, one of the semiconductors, reported they missed $7.40 versus $7.48. And you might say, well, it's just 8 cents. Well, it is just 8 cents. But with growth stocks, we're hoping that they continue to beat and raise forecasts. We don't want to see a miss. And so the stock was down a little over 1% after hours. So not a huge hit, but you can see it's been in this downtrend. So there was nothing to really jumpstart it to get it back through the key 20-day EMA. We tried to go through there earlier today and Wednesday, failed. And now we're looking at a slight move lower based on where the action was after hours. One stock that was getting hit pretty good after hours was EFX. So this is Equifax. They actually beat on the bottom line. I didn't see their revenues, but they did beat on the bottom line, $2.22 versus $2.15. But the stock was down 10% after hours. So that would take it down to roughly 199 or so, which is going to break down below this prior low. I don't like to see that. So unless it can come back up and rally and open tomorrow around 204 or 205, it looks like it's going to break down on the open. And I don't think that's a very good look here for EFX. Let's see, what else do we have? One stock that was getting a pretty good reaction after hours was United Airlines. So we've seen a little bit of strength coming out of some of the airlines. We had Delta reporting early in earnings season about a week ago, and Delta has been performing pretty well. Now you've got UAL, which is trading above and bouncing off of its rising 20-day. I mean, it's got the makings of an uptrend right now. And the stock, after reporting earnings, by the way, their loss was $4.24, which was worse than the $4.19 expected. But UAL was up 7.6% after hours. So 7% on a $46 stock would be about, I don't know, what, $3.20. So this is probably going to be up about $3.40, which would take it up close to $50 based on what I'm seeing after hours. That would get it up pretty close to about a 5-month high, that mid-February high. So airlines starting to show a little bit more strength, which is good to see. Airlines, you can see here on an absolute basis, also trying to get up to this 5-month high, trying to clear that February high. Maybe with UAL's numbers, maybe we'll see that breakout tomorrow. That will be something to watch. One of the stories maybe to watch on Thursday. Let's see, one stock that I did not like going into earnings, and I think it was reported, I think it was showing strength after hours, but it was just a horrible report. They were Carvana, expected to lose $1.72. They lost $2.89. And this was one of those companies going into earnings that I said I thought could potentially struggle or, maybe come out with some bad news. The news was not good. Now, it might be a sell on the rumor, buy on the news type of situation. So maybe short term, we do see a little spike. I wouldn't trust it. We'll see how far it can possibly recover in the morning. But this was one that looked really horrible. And when you look at the performance of the NASDAQ on Wednesday, the fact that it was so poor, one of the reasons, or probably the biggest reason, was Netflix. I mean, Netflix took a big hit. You can see right here after its earnings on Tuesday evening. They came out and they showed a loss of subscribers for the first time in 11 years. They hadn't lost subscribers since 2011. And you can see what happened here. I mentioned this because we had our sneak preview of Q1 earnings back on Monday night. It was a free event. And I went through a number of different stocks that I liked heading into earnings. And then another group, a batch that I didn't like. Carvana was one I didn't like. Netflix was one I didn't like. And this was the second quarter in a row that I was giving some warnings about Netflix. Last quarter, you can see Netflix, it was already performing poorly. You can see the AD line was going down. Relative strength was horrible. It was giving us no good signs. Wall Street was bailing on the company, and then we found out why with the news coming out. Well, after a little bit of a bounce in late January, little dead cat bounce, we started seeing selling again. So I talked about this on Monday night and said, I see a move down and a bear flag. This looks like a flag to me. Normally you get a breakdown, and that's what we got today with massive volume, 133 million shares. Look at the last year. Nothing even close. I mean, the closest thing was back in January with this earnings gap down, which was probably 60 million, half of what we saw on Wednesday. So, rough day for Netflix. But again, if you follow relative strength, you follow the AD lines, the combination of the two, normally gives you some pretty decent signals as to what type of report they're going to have. Now, you don't always know whether they're going to gap up or down because, again, sometimes you have a sell-on rumor and then the bad news comes out and it's a bounce. You get a bounce with the news. It's almost like a relief rally. So it's hard to predict where a stock is going to go with earnings, but I do think it's fairly easier to get a sense of whether or not a stock is going to report good news or not. And clearly that was not the case with Netflix. All right, let's wrap up with the three you must see. Let's go ahead and start off with Stride Inc., ticker symbol LRN. This was a company that I was actually talking about just as the market was opening on Wednesday morning I was doing my Trading Places live show over at Earnings Beats. And by the way, anybody can come over and attend that. So right about 8:45 in the morning, the room will open on Monday and Wednesday mornings. But you just come over to our website and click on Trading Places Live. And as soon as you do that, if I do it now, it's going to just show a recording on here, which is the recording from the show that I did earlier this morning. But if you come in after 8:45 on Monday and Wednesday morning, between 8:45 and 9, there will be a link here where you can click and come right into the room and listen to the show. That one is a live show, Monday and Wednesday morning. Anyhow, in that show, and you can go back and listen to the recording right at the end of the probably last 3 minutes of the show. But LRN opened with its earnings, which were better than expected. Notice it opened at $38. That was above any of the candle body highs from the rest of the year. Here, it looks like we had a high of about 37.80 or something, 37.75. That was the high close. We opened above it. What I said was normally that is a sign to me that the stock is likely to go higher. So I said, maybe we get a slight pullback into the open. And then when it breaks above and starts moving back up to new highs, normally that is a good sign for the stock. I want you to look at what happened to it today. So I think we're, doing pretty good there as far as LRN. Now, a couple of others I wanted to give you just real quick. Dow Holdings has broken out above the prior high, now about to challenge the June high. And the other one, NUE, both Dow and Nucor report earnings tomorrow, and they're both looking pretty strong heading into earnings. So I expect some good news coming out on those two. Listen, everybody have a great day on Thursday. I'll be back next week for your next Trading Places Live over at Earnings Beats on Monday morning. Until then, enjoy the rest of your week. Be careful out there. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.